get going today, there's a few tools I want to make sure you're comfortable in using. The first is a poll. We'll be doing polls throughout today. So here's my question as we get going. Let's make sure everybody's comfortable. You should see on your screen a poll. And the question today is, have you attended this webinar before? Is this something you've been a part of? Now, for those that are new, this program, this webinar is an open enrollment. Anybody can join. You don't have to have gone through one of our programs to participate. That being said, everybody who goes through our program is invited specifically to come as a continued learning. Business and financial acumen, the ability to learn that is not just a one-time event. So continue to come back and practice using the strategy tools, the financials tools to assess companies is a great way to continue to build your capabilities. So highly recommend that. Now, if you're new to us, no worries. I'm going to give you a tool at the end of this program that will allow you to continue to come back and continue to practice using these experiences. Here at Acumen Learning, we've been in business for 20 years, 20 plus years. We focus purely on the topic of business and financial acumen. What we find is senior leaders of some of the best companies in the world. We've had a great chance to work with 34 of the Fortune 50 in our experiences in the last 20 years. And what we find is senior leaders are doing everything they can to squeeze a dollar out of the financial statement, create greater cash flow, greater profitability for their business. That being said, you think about who really impacts the business. It's employees, it's colleagues, it's peers, it's direct reports. Yet what we find is employees are kind of functionally brilliant, very good at what you do, but we tend to kind of go through our career with blinders on. I'm in sales, I'm in ops, I'm in finance, whatever my role might be. Well, what business and financial acumen is about is stepping back for a moment. You're already an expert in your functional role. Step back, think like a CEO, understand the key metrics, understand the key strategies. Then with your functional brilliance, be able to go back and execute around it. So these calls that we do are ways to continue to practice using the tools and assessing other companies. Now, as I look at it, it looks like everybody's responded. It looks like, boy, about half of you, it's your first time. So welcome. For those that have participated in the past, thank you for coming back. It's always good to have you come back. And I recommend to continue to come periodically. If you're new, you've just completed our courses, it's great to do it the next 2 or 3 months. It really helps solidify some of the concepts in the program itself. Well, looks like we're comfortable using that tool. Let's jump into our second tool. It's the chat box. And here's what I want you to do. Just put where you're calling in from. Could be a city, could be a state, could be a country. Now, the key thing with this is make sure that it's set to everyone. In the top, it says to. Make sure it says to everyone. Let's make sure that chat box is working. Where are you calling in from? Me and my colleagues here, we're just south of Salt Lake City, Utah, at the base of Mount Timpanogos. If you're familiar with the Robert Redford's Sundance Ski Resort, we're just on the south side of that. But a great place to come skiing as we get ready for fall and into the winter here. So looks like the chat box working well. And as Bailey described, with the number of people on, that's where we'll be answering or asking questions. So feel free to use that as a resource as we get going today. Well, with that kind of kickoff, let me go ahead and jump in. You come to a program where we're going to look at how to listen to an earnings call, how to assess what's getting communicated. Now, these earnings calls happen on a quarterly basis. They're not required. Executives aren't required to do it. Yes, yet most executives will take the opportunity to do these earnings calls. Now, as you look at these earnings calls, my question here, another poll question, you've come to this program. When's the last time you listened to an earnings call? That's the question I have. I'm going to put it in a little chat box here. Here's my question. When's the last time you've participated in an earnings call? That could be your own company. Could be maybe a customer you're looking at, a competitor. Maybe you're looking at just from a kind of a financial assessment. You look at your portfolio of investments. You really want to understand the core of that business. Do what I call functional, what's my term I'm thinking of? Foundational investments rather than just kind of the technical investments, being able to understand the business model and what the economic value of that company is to make your investment decisions. Well, it looks like a number of you have responded there. Let me give it just a moment here. These calls happen on a quarterly basis, and they're open to everybody. Now, if it's prior to the call, you can actually register for the call, and you'll get a little invite, and you can jump on and listen to the call. Now, when you're listening, all you do is listen. There's only one company that I'm very familiar with. It's Tesla, where they allow individual investors to kind of submit questions. But the people who are asking the questions are going to be those analysts, those major investment firms, analysts who are tracking the stock as an opportunity. So it looks like 65% of you, it's been this year. A few of you, 16% never. Well, my hope today is to motivate you to say, you know what? I want to listen to these. I think there's some value. I call these the hidden gems. As we go out and we train with some of the best companies in the world, what we find is that employees often think we're employees of the company. As I teach to a client, they'll say, hey, how long have you been working for us, et cetera. Now, the reason being, and they say, you seem to know a lot about our business. Now, I wish I could say it's because I'm brilliant. I wish I could say it's because of my academic background. Here's what it is. It's because I can read. This information is available to all of us. So if you want to understand what's really going on with your company, what our strategy is, what the goals and objectives are, as well as what are the metrics, how are we tracking toward them? It's all available to you if you're in a publicly traded company. Now, if you're privately held, you may not get all that information, but this tool is also a great resource to kind of assess in a privately held company, what is my leadership speaking to? Can I assess what the strategic focus is and know what I can do to impact the business? So, well, with that in mind, let me go and jump in here. Let me give you some stats. As you think about these calls that happen on a quarterly basis, here's some sobering stats. 95% of employees don't understand their company's strategy. This comes from a Harvard study done a number of years ago, but 95% of employees don't understand their corporate strategy. Now, you think about a small business, there's 20 of us or so. Yes, we would know pretty clearly and interact with each other fairly regularly to know kind of what our strategic objectives are. But think of companies that have tens of thousands, hundreds of thousands of employees. How do you get all those people understanding your strategic objective and executing around the strategy? Well, if this is true, 95% of employees don't understand their company's strategies. That can be a problem. Here's another stat. 90% of employees don't understand their company's important business metrics. Now, have you think of your metrics. If your executive was to come out and talk about free cash flow, talk about EBITDA, talk about return on invested capital, would you be able to articulate to a colleague, a peer or direct report, what those metrics are, why they're important, but most importantly, what can you do to drive those results? If you can, that's awesome. That's the type of business acumen we're trying to develop. That being said, based on this stat that comes from some of our research, 90% of employees don't understand those key metrics and measures their executive team are communicating to the market. Well, now imagine you're CEO of a multi-billion-dollar company. Lowe is the one we're looking at here, Mr. Marvin Ellison, and you've got all these employees and all this stuff. What is it you want your customer to know? What is it you want your employees to know? What is it you want your shareholders to know? What is it you want your partners to know? What is it you're trying to communicate to get everybody aligned to get that high execution? You think of a company the size of Lowe with 17,000 stores, globally dispersed, thousands of employees. How do I get everybody understanding what our key metrics are, why they're important, and most importantly, how can I impact them? Well, that's where business acumen comes in. Now, often we think business and financial acumen, we immediately jump to the idea of financial statements, being able to understand financial. Now, that's part of it for sure. Whether we like it or not, finance is the language of business. But what I find with this understanding of our business, it's not just a business acumen component, it's an engagement component. Let me tell you why. There's a stat, many of you may be familiar with this. Every year, Gallup does an assessment around engagement of employees. This is a U.S. data. Now, they do it beyond U.S., but this is the U.S. numbers. So this was 2022. They asked employees, and it's thousands of employees, tens of thousands of employees they asked. And they said, are you engaged? All the way down to actively disengaged. And this is what they found. 68% of U.S. employees are either disengaged or actively disengaged. That's a pretty big challenge here, right? If truly 68% of our employees, and if you listen to Lowe's call, you'll hear them talk a lot about their employees. In fact, they're taking $100 million and getting bonuses back to their frontline hourly employees for their Q2 performance. They talk about this in their communication. But how do you really engage? Well, I'm going to suggest you, I've been doing training development, worked in academics for many years, and last 17 years working with companies. And as you think about leadership development, there's kind of three areas companies typically talk about. One is leading yourself. The other is leading a business, leading a team. And the last is leading the business. Now, a lot of my career I spent on the first two, leading myself and leading others. And the third one, I kind of dabble in a little bit. But what I found in my experience, the more the employee understands why a company is doing what they're doing, the more employee understand what those key metrics are, how they impact those metrics, it's as engaging as any other a leadership topic like coaching, feedback, personality tests, leadership styles. In the end, once an employee understands the why behind what they're doing, they can see the big picture of their company, you're going to get higher engagement. And that's what we find so business acumen is not just to help us understand our business, it's actually a way to engage your employees. So if you're a leader in your organization, the more you understand about your employees, one of the ways you can overcome 68% of employees being disengaged, this comes from Corporate Leadership Council, is this. The top 2 things they suggest that will increase engagement or have a connection to business or financial acumen. The first one is can make a connection between the work they do, organizational strategy. So in order to do that, I've got to understand the strategy to see how I'm driving that. And the second one, how important is my job to the overall impact of the business? We have a book that we provide in one of our programs called Seeing the Big Picture. It really speaks to this point number 2. Once an employee can see that big, you all have functional expertise. You know your functional role, but the more you can see the bigger picture of what the company's doing, what we're driving towards, and most importantly, what can you do to impact it, you're going to see increased engagement in organizations. And we suggest that a better understanding of the corporate strategy, better understand the key metrics to measure, and be able to articulate that to your team members or you, as an individual contributor, be able to understand that yourself, you're going to see increased engagement, increased excitement about what's going on in your organization. So with that kind of pitch as we get going, let me suggest to you one of the greatest ways you can do that is obviously coming through one of our programs. But in addition to that is this tool. If you will take the next 2 to 3 quarters, if you're publicly held, if you're selling into a publicly traded company, or you just want to build your capabilities around, my promise to you is this. If you do 2 to 3 quarters consecutively, take this tool out, use the tool and assess it, you'll absolutely build your credibility, you'll build your career, and you'll build your company. That's what business and financial acumen is all about. So with that introduction, I hope I get you motivated as I go through this to show you how to use the tool, that at the end of this, you're going to get excited to say, you know what, Brent, I'm going to give this a try. So let me give you what we're going to talk about in the remainder of our course is I'm going to give you just a process. I'm going to give you a framework, and I'm going to give you 2 tools. That's what I'm going to try and do in the remainder of our time. So the process is right here. As you think about these earnings calls, how do I listen to them? You got to prepare for them. You got to do some analysis during the call or after the call, and then you got to do something with it. In fact, to me, this right here is core. If you know it, if you see it, if you take the time to assess it, and you don't do anything about it, you have wasted my time and your time. But if you can take this process, you absolutely, and you apply it, you will build your credibility, you'll build your career, and you'll build your company. So let's jump in the prepare phase. Now, again, you're going to get this sent to you at the very end. You'll get access to this, so don't worry, it's coming your way. Don't have to take a bunch of notes. Just kind of engage with me if you would. Have your chat box out because there'll be some questions I'm asking. But here we go, the prepare phase. What are we talking about here? Well, basically in the prepare phase, you got to prepare, as you think of these calls, basically, there's 2 parts to them. There's a prepared remarks where the CEO, CFO, and some of the other leadership, they'll communicate. That's their time to communicate their messaging. They're communicating their marketing pitch. They're talking about their performance, kind of where we were, how we performed, and where we see ourselves going. Now, even if they have a tough quarter, for example, with Lowe's, they were down 1.6%. Now, they know why and they communicate why, but their sales growth was down a little bit. Well, they talk about, well, why was that? What caused that? And what are they doing to improve performance throughout the remainder of this year? Now, once that prepared remarks is done, then you have this Q&A experience. Now, the Q&A experience, again, is not for you and I to ask questions. It's for these analysts. These are individuals who are part of these large investment firms, companies like Barclays, Wells Fargo, major investment firms, right? Chase. They get a chance to ask clarifying questions. Now, a lot of people who've done these, they'll say, well, I'm just going to listen to prepared remarks. Now, that's good. That's a good start. But I highly recommend engage in the whole experience. Here's why. What I love about these Q&A is, remember, this part right here, this is not required. This is not something they have to do. Whereas quarterly, they have to submit financial information to the SEC. That's all regulated. The prepared remark is a bit of their marketing pitch as well. What I love about the Q&A is you start to see, are analysts buying what they're saying or they question it? For example, with Lowe's, there's a lot of conversations they had around growth, a lot of conversations they had around their people and the prepared remarks. But if you listen to the analysts, the majority of their questions were around profitability. What's happening around your profitability? So you see kind of the message, the the executive team was communicating, the market was kind of saying, well, wait, I want more color around this. I want to know what's happening around your pricing. I want to know how much your benefit you're getting with some of these cost reduction programs. What do you see profitability going to look like in the future? So it's a real great way to assess and hear what they're talking about. So in the prepare phase, there's three things you've got to do. First, you got to locate the transcript, the call, or get access to the transcript, I should say. Now, the easiest way to do this, you've been with me before, is just jump to Google, right? That's the easiest way to do. Pick any company. Now, you can go to their website. Every publicly traded company in their website is going to have an investor relation page. So you can type in the name of the company, something like this, Lowe's investor, and it's going to guess for you, investor relations page. Or you could be a little more specific. This is what I like to do. I just go Q2, and it already starts guessing. They're saying transcript, they're saying earnings, etc. I'll just click on that. Let's see where it takes us. Now, as you get going here, there's a number of third-party resources available. But I like to look for the company specific. And you see it right here. These first two are company. But you'll notice you got PR Newswire, you got CNBC, Yahoo Finance, a number of different third parties that kind of speak to that. Well, I already see it right here. I click on that, and it's going to take me right to information. So first of all, I get their press release, a nice little data point. I can come back here and jump into a little bit more data where they talk again about some of their press release options available here. As you look at this, if you get into the earnings call portion, you start to see what's coming up and what's happened. So here's the date it's going to happen, etc. Boy, I just did this earlier, and it's taken me to different websites here. It looks like it's not feeding my thing. It looks like it's not going as quickly as it was earlier. So let me come here, jump in here, and just click on their quarterly earnings. And right here, I've got information. I click right here. I see all the information. Now, if it's prior to the call, there's actually a place where you can register for that call. Now, their next call is not till November, but they'll have a little link that you can click on, and it registers for it. Well, because it's already happened, all the recordings. So right here, here's the recording. I click on that, it'll give me the recording. So don't worry if it's early in the morning or late at night, you don't have time to listen to it. Don't worry, it's available to you. They also have the financial statements. You want to get a quick access? Here's their financial information I can jump to quite quickly there. I also have an infographic. These are kind of nice. Sometimes I'll have a slide deck. They have an infographic where they kind of highlight some of their key metrics and measures, key strategic objectives they want to communicate to you. You also get access to the transcript. Now, not all companies do this, but this is, of course, after the call has happened, you get access to a transcript where literally it's word for, it tells you who was there. It tells you word for word what they said. So here's Mr. Ellison, their CEO, talking about their business, what happened in the quarter. Then they've got their EVP of merchandise, Mr. Bolts, talking about the performance of the company. You actually have, this isn't very common, by the way. It's typically their CEO and their CFO. You have Mr. McFarland talking about their stores. So you kind of go through this community. It's all written out for you. So if you don't want to listen to it, you can wait until they pulled out the transcript, which usually within 24 hours of the call, you'll get access to that. By the way, there's also third-party resources you can access to. We'll do that as well to get access to a transcript. And then here's the Q&A. What questions were asked from what companies and what their responses were. Well, folks, that's how you access. Now, again, if it's prior to the call, you'll actually see a place where you can actually link to that. You can actually jump on it and say, okay, I want that. They'll give you an invite. You're ready to go for the call itself. So that is the first part. You got to access it. Again, prior to the call, you register for it. After the call, you just get access to the content. The other thing you can do in preparation for these calls is to review your past calls. Now, some of you will say, well, Brent, 16% of us haven't ever listened to an earnings call. Well, don't worry. It's not like you have to listen to the prior one to be prepared for the future one, right? That being said, it's all available. We saw that. If you go back to that website, you'll see I can look at Q1. I want to see what happened in Q1. Or right now, let's say I want to see Q2, and then I'm going to listen to Q3. It's all available. So you can always go back and see what's going on in the company. But one of the resources you'll have is once you do this multiple quarter, the tool that I'm going to give you, just keep that as a resource. It's a read-writable PDF. You can keep as electronic copy. You can write it and just put it somewhere. And then before the call, just kind of review your notes. is a great way to do that. The last thing I recommend is to maybe do it with a team. I find that if I do this with a colleague, a peer, a direct report, and we're listening to the same call, we can kind of bounce ideas off it. It really makes it more engaging. Now, if you're in a leadership role, this is a great activity. 1 hour a quarter, you and your team go through that call, complete the tool, and the last part of the tool is your apply. What are you going to do with it? Imagine that as a team from a strategic perspective. Take the time to listen to the call, assess it together, and then as a group say, here's the top 2 or 3 things we want to work with in Q3 or in Q4 or whatever quarter you want to focus on. That's a great way to kind of build that credibility, build your company, and build your career. Folks, that's the prepare phase. Well, let's jump to the analyze phase. And before I want to do that, I want to introduce, for a few of you who haven't been through our programs, I want to introduce a simple framework as you think about the business. It's a mental model you can use to assess any business. And the way we describe it in our core, these are the 5 fundamental drivers every company focuses on. Now, you'll notice the foundation of the first 3 are the financial statements. That's usually what people think of when they think of business and financial acumen. But in here, we define each driver. We talk about why they're important, what the key metrics are, and how you can impact them in our course. You don't have to have gone through our course, though. There's some tools I'm going to give you that will give you a quick introduction to each of these. But just by way of reminder, many of you have been through our program. Open your chat box and let's talk about each one of these drivers at a very high level. So you think about cash in a business, a common phrase is cash is blank. Fill in the blank for me. Cash is blank. What would you put in there? So you think about the importance of cash in business. Cash is blank. Open up your chat box. What do you say? Cash is king. We can say queen. We can say royalty. We can say oxygen supply. I've heard people say cash is blood of a business. In the end, cash is vitally important. Now, there's different types of cash company looks at. We call one the cash position, sometimes referred to cash and cash equivalent. That's the actual financial statement. But that's kind of like a savings account, a place where a company holds on to cash for unexpected expenses as well as future investment. That kind of goes up and down based upon strategy. Versus cash flow, which is kind of the second part of this statement here, cash flow, that represents the difference between all the cash that came in a given period of time minus the cash that goes out. Now, as a business, I want to do everything I can to grow my cash flow. I want to increase how much cash I generate for my business. Why? That gives me more cash to then reinvest in my business. That gives me more cash to distribute to my shareholders. That gives me more cash to pay down debt, strengthen my financial position. So typically, we like to see cash flow or the generation of our cash to go up year over year, quarter over quarter, etc. Now, how do we impact that? Well, anything we do to drive profitability, increase revenue, reduce cost. Anything I do to collect faster on my receivables, if you've ever heard of DSO, day sales outstanding, those types of metrics. Inventory, how much inventory I carry and have the right amount of inventory, and then pay slower, the levers there. Well, let's talk about profit. There's 2 levers you have that are significant. I call them business 101. If you've been in my class with me, you'll know what these are. But 2 levers that impact profitability. If I want to grow my profitability, I can increase one thing and decrease another. What are those 2 levers? Do you remember? Put them in my chat box. Now, don't worry, they're not rocket science. Even if you haven't been through our class, take a stab. If I want to grow my profitability, I got to increase one or reduce the other. Yeah, so Luis kind of, and Blair's correct as well. So if you look at the whole number, I want to increase my revenue, which is also known as sales, okay? Both of those are the same thing. Also, by the way, referred to as top line. Well, you can do that as Blair talked about by increasing my price, right? If I increase my price, that is a huge benefit to my profitability, especially if your costs remain flat. The other thing I can increase is I can increase my volume, sell more of my products or service. Now, of course, for a retailer like Lowe's, that's a big part. I want to sell more of my products or service. And as you said, reduce our costs on a per unit item, or you look at reduction of expenses as you look at a whole business, et cetera. So those 2 levers have a significant impact on profitability. Now, of course, we hear a lot around cost reduction. Why? It has a big impact. Our executive team typically feels like that's something we can control. On the top side, though, we also want to grow that revenue, want to get more volume, want to get better pricing if it's appropriate, especially as you deal with inflationary pressures on our cost side. Well, the third driver we talk about is assets. Assets are anything you own or control which has value. You think about a company like Lowe's in the chat box. What do you think they own or control which has value? What would be on their balance sheet as assets? Put in the chat box. Think about a company like Lowe's. If you're international, by the way, Lowe's is not global. If you're not familiar, if you're coming from international, it's a home improvement store where you're basically buying everything from lumber to appliances, basically anything you want to do. They call it the total home strategy, right? Everything from remodeling to putting a fence at your house, all that stuff is there. Yeah, so absolutely. They're going to have stores as inventory. They're going to also have buildings. They're going to have property. Yes, inventory is going to be a big part of it. Absolutely. If you walk into a Lowe's, it's a huge kind of warehouse style. You're going to have wood. You're going to have appliances. You're going to have nails. You're going to have hammers. You're going to have everything. Any tool you'd ever want is all there, and home improvement is available to you. Now, as you look at that balance sheet, anything we want to control, they also have cash. In the end, what's that right amount of financial strength of the company versus how much am I going to take those assets and utilize them? So there's this balance between how much I strengthen my balance sheet, meaning pay down debt, hold on to my cash, versus how much do I deploy that to grow and expand my business. That's a balance they're driving to as a business every day, every quarter, every year. Growth is, of course, what investors expect, and people are what makes it happen. So with that brief introduction, let me share how we use this 5-driver model as a simple way to assess strategy as well as assess financial performance. So let me introduce you to the first tool as you talk about analysis. How do I analyze it? This is very simple. This is not rocket science. So you take those concepts, those 5 drivers, and what you're going to do is you're going to listen to the call or read through a transcript. Now, as you go through and listen to that call and read through the transcript, every time they say something about cash, you put a little slash mark. Every time they say something about profit, you put a little slash mark, etc. You see how that works? You keep doing that throughout the call. How many times they're talking about different slash marks. Now, you might say to me, Brent, wait a second. I've never taken your course. How do I know what these are? And how do I know what terms kind of reference cash, profit, asset growth, or people? Well, my instructional design team is awesome. They do 2 things for you. They provide, number 1, a definition of what we're talking about. What do we mean by cash? Basically, a definition of the 2 metrics I just talked about. In addition to that, I love the second part, and every single one of these have these little example. When you get your sheet, you might just mark those and call them trigger words. They are exactly that. They trigger. If I hear them talk about a source or a use of cash, what's a use of cash? Dividends. Taking money and giving it back to investor. That's a dividend. Well, that's a use of cash. I got to have cash to do that. Buying back stock. Well, I got to have cash to buy back stock. Issuing stock, capital expenditures, all these different terms. I hear any of those, I'm putting slash marks right here. Versus on profitability, I hear stuff about sales, revenue, profit measures, a bottom line, top line. That's all profitability. Again, price improvements, volumes, as well as a reduction of cost. Well, once you're done with that, you're going to get a bunch of slash marks. So the next step of this is you answer 4 simple questions. The first question is, which driver seems to get the most attention? I love the second part, and why? Then what are the 2 or 3 main points the executive was trying to make? What are the goals, trends, or objectives going forward? And finally, what key questions or concerns were raised by the analyst communities? This is kind of that level check. What are we saying, or the company saying, versus how are the analysts receiving it? It's a great way. Now, once you're done with that, the last thing you might do is just kind of jump in, look at their stock price. After the call, what's happened? Is it improving? Is it decreasing? Now, don't get too critical of those, because sometimes the whole market may shift up or down. We're dealing with a budgetary issue in the federal government here. That's going to impact the stock market. It has nothing to do with Lowe's, right? But being able to see after they give their quarterly call, how the market's responding is a great thing to look at as well. Well, folks, that's the tool. My guess is you listen to a call. The additional time to complete this tool is probably about 15 minutes. Now, if you want a more robust conversation, you can take a half hour if you have a team of people discussing it, but it's a great way to get clear on that strategy. So here's what I want to do. I want to do this together. I've got 3 quotes. And what I want you to do is get your chat box open. You got the 5 drivers in front of you. I'm going to read through this first one from their CEO. And what I want you to do is put in the chat box, which of the 5 drivers do you hear being communicated? By the way, this is not an exact science, meaning if we have 100 people on the call today, and every single one of us was to do this, we won't get the exact same number of cash, profit, assets, growth, and people, exact same number of slash marks. That being said, we do about 1,200 of these a year over 20 years. And what we find is invariably in every class we do, the top 2 or 3 drivers, everybody will have in the top of their ranking, right? So let's go through this. For the second quarter, comparables, sales declined 1.6%. Right there could be a trigger. Our results were driven by a strong spring recovery combined with continued growth in pro and online, which helped to offset softer do-it-yourselves, DIY, discretionary spend, and 160 basis point pressure on lumber deflation. For those who remember last year, trying to get access to lumber, man, it skyrocketed, a huge price. Well, it's come down. It was high demand 2022. I'm not saying it's not still high demand, but you saw deflation. So which drivers do you see being communicated in here? Which of the 5 drivers? Now, there's actually words that are drivers, right? See right here, that's going to be one, right? The growth there. Now, what about if I'm declining in sales? Yes, profit there, Eliza, that's going to be one right here. Sales, that's profit. But a decline, it's still growth though, even though it's going the other way, right? We still have growth going on as we look at that. Okay, let's jump to the next one. Let's get some more involvement here. Q2 was Q2 also reflected the importance of our ongoing investment in total home strategy. Now, what is that? Basically, they want everything soup to nuts, one-stop shop from the pro level. These are contractors, etc., all the way down to do-it-yourselfers to have access to products, technologies, tools, resources, etc. And despite an uncertain macro, these investments are paying off with positive comps in pro and 6.9 comparable sales growth online, as well as continue to improve our omni-channel experience. Which drivers do you see coming out in that? Put it in the chat box. Open your chat box. Yeah, some growth stuff there. We continue to, even though they're down 1.6, they're really highlighting the segments of their business that are growth. Now, it's growth in sales, right? Now, interesting on the growth in sales, some of you will say profit because it's the top, it's part of the top of the income statement. Sales, once we generate a profit, eventually we collect that, becomes cash. So cash might be there as well. Well, let's look at this. We're pleased that our core pro customer to small to mid-sized pro remains resilient and continues to respond to our expanded national brands. MVP's Pro, that's our top rewards program, and enhanced online tools. In our most recent survey, nearly 75% of pros reported healthy project backlogs, and lead volumes remain consistent with recent quarters. Which drivers do you think are talking about there? There's one we haven't talked about yet. There you go. People, for sure. One of their key customers is this pro group, right? These are contractors. These are, everything from big contractors to small contractors, where they come in, they make orders, and they get access to materials, right? So definitely people. Assets. As you think about the expanding of the technology they're using to enhance their access, their streamlining processes, what they have and how they utilize what they have definitely are going to be part of it. Well, folks, that's how you do it. Pretty simple there, right? Again, it's not an exact science. That being said, once you do this analysis, you've got a real clarity of where they seem to be focusing their time and attention. So let me do another one here. I won't read it. You just kind of review it yourself in the chat box. What are we talking about here? This is their Brandon Sink, their CFO. What is he saying? Go ahead and put it in the chat box. Which of the 5 drivers are you seeing from Mr. Sink? Okay, so we're getting some good profits. Now, this is one, if you're familiar with retail, average ticket, that's really speaking to profitability, right? It's basically their sales, right? How much I sell per ticket. Average ticket was up 3% to prior year. So quarterly, we're getting a little bit of growth there, right? Tickets increased. The majority of our merchandise categories were offset by lumber. So you have some increases, some decreases. Anything else that stands out there? Obviously down here, as you're talking about gross margin, that's all profitability. These are all profits. One of their key metrics, as you look at their kind of dashboard, is going to be gross profit, meaning how much do I sell my product for versus how much did it cost me to bring it in inventory? What's the cost of the product itself is what they're looking at. So yeah, a lot about profitability in this one, some about growth as you look at that. Both growth going down as well as growth going up in their business. Well, not only in the prepared remarks can you use this tool, you can also do it in some of the analyst questions. So this is Chris Hovers from JP Morgan Chase. Here's his question. Which of the 5 drivers you see him focus on in this question? And we'll wrap this up. I'll underline some trigger words for me, and you tell me which drivers they might fit. This rate of change might trigger some thoughts there. This right here, when you see the word, it gives you some things. Okay. Yeah, definitely there's some growth in there, right? And growth around profitability as well. As you see, kind of top line is another word for revenue or sales. These are all the same thing. Boy, my pen isn't working very good. I don't know what's going on there. But absolutely, definitely there. Now think of that from his perspective. I told you they talked a lot about growth and a lot about their people, and then analysts start asking these questions around profitability. The two biggest factors for their spend that they talk about, one in which is this discretionary money. Think about that. When do you do your do-it-yourself projects? Well, when I have a little extra money, I'm going to, repair something in my house if it's not totally out, right? Or I might upgrade. I might put a new carpet in my home, or finish a basement or something. Well, I have a little more discretionary fund. I'm going to do that. The other factor they talk about is price appreciation, as the value of price increases. Well, what you see happening is we're seeing a little bit of home decreasing, so depreciation, reduction of value as we see price interest rates increase. Well, now all of a sudden I've got a home that's kind of deteriorating. The idea is they should see more people saying, well, rather than buy a home at 7% interest, maybe I'll just upgrade mine. I'll go and put in a new bathroom or do different things like that. So that's kind of the question, is what's going to happen in the market? And Mr. Hovers was asking questions around that. Well, folks, that's how you do it. We don't have time to go through the whole thing. We only got about 22 more minutes as we wrap this up. So let me just kind of share. I did it for you. I went through it and did the rest. Now, one of the things I like to do is I separate out kind of the prepared remarks versus the analyst. Why I like to do that? It kind of gives me a visual or where they're aligned and where they're not aligned. So definitely around profitability, somewhat aligned. Again, fairly close here, very close around growth. Here's one, the people, a lot more people discussion over here than where the analysts were focused. Now, if you look at this, again, not rocket science, you may have higher, you may have lower, but I have this one, number one, and people number two from a company-wide assessment. So what do I do with that? Where do I go with that? Well, remember, we got to answer those questions, the 4 questions. So let me jump into the questions. And here they are all answered, but let me just go ahead and go one by one. So the first one was, which business drivers seem to get the most attention and why? Let me share what I found or what I saw. So definitely growth was. Now, a couple of things. One was this idea they were down. Well, they talked about being down 1.6%, but a big part of that is they divested their Canadian assets in 2022. Now, if you've taken our class, we talk about one way in which a company can access cash is they can divest an asset. And we talk about the pros and cons. Well, the pro of that is you get cash coming in. The con is you no longer have those assets to generate revenue. In fact, the difference is about $1.9 billion that they generated. Boy, my pen is not working very well. I don't know what's going on there. It's being delayed there. Well, that's supposed to say 1.9B there, but they basically they divested assets. So if I had those assets in 2022 and I don't have them in 2021, of course, the comparisons are difficult. So they'll take some of that information out to kind of get a more accurate look at that. But they are seeing growth in a lot, although they're down 1.6% sales comparables. Basically, they are seeing growth in kind of plumbing, building materials, paints. We continue to outperform the market. We completed the rural expansion. They built out 300 new stores ahead of schedule in this quarter. So they're expanding. They're going to smaller locations. Rather than the metropolitan areas, they're putting Lowe's in smaller rural locations, which, of course, creates a whole new market share for them. Their average ticket price was up, even though revenue as a group was down. These PPIs, these are kind of their internal, it's their, as they call it, perpetual productivity improvement, I think is what they're called. But their initiatives where they try and improve their processes, that's really having a positive impact on their growth. Basically, they're doing things quicker, faster. Basically, one of the things they're doing is they're getting rid of their transaction technology. They have this old kind of blue, they call green screen. Think of old computer technology to kind of touch technology that we have today, which is much more efficient, has much more inventory management capabilities, et cetera. So they're talking about growth, not just that from a growth of top line revenue, but expansion of new customers, expansion of new products, more demand for their products, and more market share in the industry. Well, the people was kind of an interesting one. I got to tell you, you don't get a lot of this kind of conversation happening. It really kind of speaks to maybe potentially what they're dealing with. Their people, a lot of times these earnings calls are talking internally. They're talking about their profitability, cash flow, distributions, et cetera. The idea of talking about your internal team, a lot of times, I hate to say it, but investors aren't so concerned about that, right? Well, here's a CEO talking about some of the things, and their vice presidents talking about some of the things they're doing with their internal teams. $100 million in bonuses for our frontline hourly associates. They take $100 million. They're going to the frontline hourly associate. Now you tell me, put the CEO hat. Why am I taking so much money bonusing my frontline workers? Well, we're dealing with the demand for talent, right? And their ability to be successful. How many of you walked into stores or other locations where they just don't have enough employees? Well, Lowe's really saying, look, we want to take care of our employees so we can continue to provide a good product or service for our customers. So a lot of their conversation was things they're doing with their internal team, which you rarely get. The second thing they talk about, again, another internal focus here, our investment in our associates is paying off as we continue to evaluate the customer experience. With a 200 basis point, when you hear basis point, just put a point there. That's 2 percentage point improvement in both your DIY and pro customer service scores. So basically having better employees, more engaged, more excited about what they're doing, being compensated well, you get greater engagement, which has a greater experience for the customer. Now, to me, it's not rocket science, right? We're dealing with challenges as having enough employees. You think about the retail space especially. They're getting hit with having enough employees. We've all gone into kind of retail restaurants, retail stores where they don't have enough employees to kind of serve their customer, which ends up being a very negative experience. Lowe's is very focused on it enough to take a significant part of their earnings call to talk about this. And like I said, it's not a common thing. So those are some of the highlights and why people was such a highlight for them. They also talked about their pro customers, do-it-yourself customers as well. But I just want to highlight how much emphasis on that internal customer. Well, so what are the key messages they talked about? That's the second question. Overall, look, we're down, yet we know why we're down. The divestiture of Canadian assets is a big part of that. Obviously, as we deal with inflationary pressures, that's playing into it. So there's a number of factors that they kind of highlight in their business. But the two factors that they're dealing with from a market perspective is that disposable income and home price appreciation. Those are the two levers that drive most of that. And so as lumber starts to come down, as interest rates increase on new homes, potentially you're going to see more people willing to upgrade on their own home versus go buy another one is kind of their play there. Another key message, we continue to tightly manage expenses. So although we're feeling that pressure around top line, we're able to make benefits. Remember, if my top line's kind of tough to see increased pricing, if I can reduce my costs, I'm going to increase my profitability, cash flow of the company, et cetera. And so they highlighted that. They also talked about ongoing momentum we experience across our portfolio with these perpetual productivity improvements. Basically, for 5 years, they've really invested on how to get better at what they do. Whether it be new technology, whether it be how they structure their space. You think about retail, there's square footage space is so important, how you market, where you put your products, et cetera. So they've really tried to think through what they're doing. Also home delivery stuff, like the same day delivery. They used to not do a lot of that other than their pro groups, but literally you can actually have them deliver stuff to your house. That's a whole new line of business for them. So really trying to figure out how to change the way they do it to manage kind of the challenges of the market is what their focus is there. And then finally, the last thing I'd kind of say is this total home strategy is working. That big emphasis on being able to be this one-stop shop, provide a full complement of products and services for pros, consumers alike, enabling a total home solution to every need in the home. And you walk in there, you got everything from the very rough plumbing, lumber, all the way down to completed products, appliances, et cetera. A one-stop shop for anything you want to do in a home improvement type of space is a big part of what they're trying to do. So where do they see it going in the future? A couple of things. They were very specific on metrics and measures. A couple of those metrics were they expect our relevant market to decline to mid-single digits. That being said, they'll capture about 1 to 2% more of that market than they currently have. So as the market's decreasing, they expect to capture more of it by providing a great experience for their customer, which is a great opportunity. If the market's decreasing, slowing down a little bit, well, our ability to capture more market share is the way you can grow your business. They continue to expect 2023 sales to be about 87. So they're not changing. Even though 2 quarters into it, you're seeing a down 1.6%. They're saying, no, we still expect to be within range. They're not changing that in any way, nor are they doing that around some of their other metrics as well. Specific in Q3, we will be cycling over our toughest quarter. So last year they were up 3%. So they got to deal with kind of a decline of mid-single digits. Plus, a year ago this time, they grew by 3% demand for their products. So they're kind of setting the stage that, look, it's going to be a tough quarter for us. That being said, we'll do everything we can to make up some of that by capturing more market share. And then kind of they continue to expect or reassure people on their forecast for the remainder of the year, operating margin expectations, and kind of growth in their PPI programs. Well, so let's wrap up this strategy tool. What key questions or concerns were asked? A lot of stuff around profitability margins discussion. There was a bunch of questions. We started that quote earlier I shared with you. Okay, on your top line, what's really going to happen there? As you see, demand for your products, as you can see price reduction there. What about the inflationary components? How much is inventory costing you in comparison to year-over-year compares? Obviously, as inventory costs more to get in the store, that's going to potentially compress margins unless you can increase your pricing. Demand and growth. Where's that demand coming from? Where do you see that growth? Particularly on the pro side, that's a big opportunity for them. As you see construction continue to be fairly strong, the big question is with interest rates increasing, how much will that slow down and have an impact on the company? So that was a question. And then, of course, questions around guidance. Do you still continue to see the expectations, not just in this year, but in 2024 and beyond? Well, folks, that is the first tool. It's called the Executive Alignment Tool. With this tool and any executive communication, you can quickly assess the strategic focus of the company. What do we know now? We know it's a little bit low year over year, but it's not low enough that they're changing their guidance. They continue to see growth in some of their core businesses, particularly on the online business and their pro side, which is a new opportunity for them. So even though you might see a little bit of decline, their average ticket price was inclined a little bit. So you're seeing this kind of back and forth. Really, the message is we kind of know what we're doing. We know that it's been a little tight. Here's what we're doing to kind of anticipate the future, but we expect upside in the coming years, kind of expectation. So a brighter future is what they're kind of articulating. So, well, where do you go next? Well, the next tool that we have is the Navigating the Financial tool. With this tool, I love this tool because it brings everything we do in our course into one place. You have the 5 drivers on the left-hand side: cash, profit, assets, growth, as well as people. Now, in addition to that, the key metrics most companies focus on. Now, each industry will have their unique metrics. For example, with Lowe's, their gross profit is a key metric. You notice I don't have gross profit right here. But you could absolutely, if I worked for Lowe's, okay, I just pull in the gross profit and do a gross profit margin versus a net margin. But what we've got here in this sheet for you is the most common metrics and measures most companies use. Now, you don't have to have gone through our class. I'm going to give you it all right here. You have the key metrics, what line items you look at in the statements. And the genius of this tool, in my opinion, is right here. So where do I go to find that information? Now, today, I don't have time to teach you how to read the financial statements. Those that come to our class, you get some of that. But this will give you enough that you can quickly assess the financial performance. Are we getting better or not around our key metrics? That's the tool. So here's what I want to do. We're going to do a few of these together, and then I'll show you the rest of them, and then we'll do our applying phase, and we'll be done for today. So if I want to assess the financial performance of a company, and I want to be able to navigate their financials, this tool will absolutely allow you to do this. So let's do the first one together. I want to look at cash and cash equivalents for Lowe's. Now, the line item I'm looking for is the same thing. Now, every once in a while, it'll change. They'll use a different term than what our descriptor is. But they call it cash and cash equivalents, so it's the same thing. It tells you what statement to go to. So just to see that you're comfortable using that, open your chat box, and using this tool, can you tell me what statement would I go to find my cash and cash equivalent? Put it in the chat box, will you? Let's see if we can use this here in the last few minutes we have. Thank you, Sarah. Yes. Austin, excellent. Eric. Yes, it's the cash flow. Excuse me. It's the cash and cash. It's the balance sheet. Excuse me. Balance sheet is where you're going to find that. Okay, well, you don't have it, but I do. If you've been through our class, you'll know that these are listed by most liquid at the top down to least liquid at the bottom. What does liquid mean? How quickly it converts to cash. So if it is already cash and cash equivalents, it's probably going to be to the top. So look at there. Tell me what the cash was at the end of the quarter, which would be August 4th, 2023. How much cash was Lowe carrying? Put in the chat box. Just see if you can do this with this. Get comfortable. Kind of look at them. Don't get afraid of them. There you go. Yeah, absolutely. $3,498,000,000. So I go back to my sheet. Boom, I've got it. Well, then the next one we got to look at is our cash flow from operations. Now, the statement I'm going to look at is right here, the cash flow statement. So let me give you that. There's the cash flow statement. Now, the term I'm looking for is actually called net cash provided by operating activities. This number right here is actually the most important number, according to Warren Buffett, on all the financial statements. Are you generating cash from your business, a positive cash flow? Of course, you see the number there. 5968. So we go and plug that in. There we go. We've got it. Okay. Let's do two more and we'll do one calculation. So I got to get my total revenue again, just practice. What statement do I need to go to find that? Put in my chat box. There you go. So I jump to my income statement right here. I'm looking for sales. They call it revenue or sales. They call it net sales. We want it for August 4th, 2023. How much revenue did they generate in the 3 months, just the 3 months? We're not doing the 6 months, for the 3-month quarter ending August 4th. How much did they generate? Put in the chat box. Net sales. There you go. 24,956. Go back. I plug that in. I got 24,996. I can do the same thing, but this time I'm looking for net income on the same statement. Let's find that net income. Again, we're looking at the quarterly numbers. How much net income did they generate? Put in the chat box. Get comfortable. We're looking for net income, net earnings, net profit. They're all the same thing. You see, they call it net earnings. There you go. They'll get confused around terms. So we got it right here. It's this number right here. Net income, net earnings, this was the operating. So the 3.8, if you're doing an operating margin, you'd use that one. But this is the net earnings, net income, or net profit. So you plug that in. Well, to do the calculation, all you're going to do is take this right here. You pull it right down there. You divide it by this number. Again, pull that down here. Gives us 10.7. What does that tell me? That says me for every $100 Lowe's brought into their business in Q2, they generate $10.70 of profitability. Now, is that good or bad? Well, you can compare it to the S&P 500, which the S&P 500, I don't know if specifically for Q2, but last year was about 11.5%. So they're right about that average you'd look at. Now, of course, you then could go, I don't have time to go through each one, but here it is all filled out. I did it. Now, what you can do with these comparison tools in our tool, you can look at whatever period versus another period, right? So here's our current period, the end of Q2, versus a year ago, the same time. And you can see, did they get better or not? Well, you see, actually, their margin's a little bit down. Now, we know part of that's down, but they talked about lumber deflation. So what they could charge for a 2x4 in 2022 is 1.6% less than what they could or what they can in 2023. So obviously, that's going to eat up some of your margin. You look at their growth numbers, and you see a little bit of dip in growth year over year, not much more dip this year. Of course, remember, we divested the Canadian assets. You'd want to see what's behind those. But that's what you do. You kind of compare year over year. Are they getting better? Are they getting worse? What's causing that? Of course, they would talk about the tough comparisons in 2023 as you come off some real growth. If you remember, 2022, particularly the first half of the year, was really strong. A lot of growth in the whole market. And that's where they started to reduce our interest rates, right? Trying to deal with inflationary pressures. Well, folks, you can do this on a quarterly basis, but you can also do it on a year to date for the first 6 months. I've done it there. If you look 6 months to 6 months, actually, we're pretty comparable year over year. Now, you can also do it by looking at competitors as well, or customers. So here I did it against Home Depot. So year to date, Home Depot, you look at kind of the size. Home Depot is much bigger at about $80 billion. But margin-wise, they're also getting a little better margin. They have growth where you see a little decrease. Now, don't get too confused. You jump in, you remember that they divested their Canadian assets. So they're down $1.9 billion in Q2 based upon divesting those assets. So that's a part of what's going on. Now, not only can you do it compared to a competitor or a customer, you can also look at any company. For those that were with us last quarter or last month, we did Halliburton, an oil and gas service provider. Very different numbers, but you can kind of see what's similar, what's different about these industries. Well, folks, that's the analysis phase. Now I'm able to understand not just the strategy, but yeah, things are tight right now at Lowe's. They don't have huge growth numbers. They don't have huge margins. They've got good margins, but what can we do to kind of withstand some of this downturn that they're dealing with as interest rates are increasing and flexible spending dollars aren't as much available? Well, the last step of this tool is you got to do something with it. How do I do something with it? It's through applying it. Now, here at Acumen Learning, as we do our courses, we've had a great opportunity to work with many great companies. And the outcomes of our companies, is what you're going to see on the screen. We had a third-party business assess what's the value people get from understanding business and financial acumen through our programs. And here's the types of things you get. 84% improved performance of your business function. 81 said they increased their collaboration. 71% improved upward communication. 77% improved employee engagement. That one I talked about earlier. 75% increased business function, and 84% said improved teamwork. Folks, this ability to understand and you do that assessment, if you don't do anything with it, you will not drive towards these results. So the goal is to, once you've done it, say, what am I going to do about it that might drive greater engagement of my team members? Why help us to be more business focused, more aligned with the company, get greater collaboration or execution in our business. That's what this will allow you to do, which will differentiate yourselves for sure. So to know and not to do is not to know. Your mom may have said that. So the last part is you got to do something with it. Here's what I did. I went through and I highlighted some of the key insights. I talk about what am I going to do with it? And then the core of this is sitting down and have a conversation with a manager, colleague, peer, direct report, depending upon what you're looking at. So for me, the key insights, impact on personal discretionary income and home appreciation, how that drives their business. It's not just the market. It's literally what's going on with interest rates, what's going on with people's discretionary income as to whether they see increase or decrease. That was the key insight for me. By being a pro and DIY segment, they protect from market fluctuation. So having both, because we're DIY and they not have as much discretionary spend, their differentiation, but I still have contractors. And today in North America or United States, we have 2 million less homes than we need available. So you still have some of that market to differentiate yourself as a business. 2022 was a great growth year for them. And now you're seeing a bit of a slowdown from that. And you see that across the whole industry. As you see interest rates, what are we trying to do? We're trying to decrease growth in the market. And so you're seeing that across many industries. But I really was interested on their emphasis of both external but also internal customer. The retention of their employees was a big factor for them. So what would I do with that? Well, for me, I'm a trainer, I'm a consultant. I want to compare their performance against their peers and determine, how they're playing in the market, the bigger picture of their industry. I want to share my findings with our consultants as well as clients. How do we think about this industry in the context of the businesses we work with? Now, if you happen to be with Lowe's, we'd love to work with you. I'd love to help your employees understand your key metrics and how they can drive to results. So please reach out to us if you're a Lowe's employee. Well, folks, that is the tool. The last thing you do is you sit down and have a conversation with your manager. If you're looking at a customer, maybe you're going to talk to your marketing team, how you can differentiate yourself from a competitive landscape, et cetera. What is it you can do? Folks, that's the process. Let me wrap up. So the last step is, remember, the second step of prepare is to review your notes. If you do this 2 to 3 times, these notes from the tool will absolutely be the notes you can review. So my question to you in the chat box, who are you going to assess using this tool? Are you going to look at a company you work for, sell to, compete against, partner with, invest in? Or some of you next month, we're going to look at PayPal. Maybe come with us and assess PayPal using this tool, and we'll have a greater conversation. Well, folks, it's been my pleasure to be with you. We're going to put in the chat box right now. You go to this link right here. You can access that tool. Go ahead and download that. October 18th is when we're going to look at PayPal, so you can register there as well. We got $100 off our online self-paced tool. If you want a deeper dive on some of these concepts, please jump in there, take that course. It's a great foundation on the 5 drivers and understand 3 financial statements. Be a nice review of what we talked about today. Well, folks, it's been my pleasure to be with you. If there's any questions, we'll stay on. If not, make sure you download that tool and have a great day. We'll see you on the 18th.